All right, what is up, tycoons? What's up, traders? Super excited for today's video. Going to give you guys another natural gas update. We're going to go over some of the natural gas news, and then in the second half of the video, we're actually going to go over the charts. Things are pulling back very much today. If you take a look at Boyle's down about 25% at the time of this recording. But we are getting some of the setups that I'm actually looking for. So make sure to smash that like button, subscribe to the channel, and stay tuned to the end so that way you guys can catch up on the technical analysis and the different things that I'm looking at when it comes to Boyle, UNG, natural gas, the futures, all of that. Okay. So natural gas plunges over 12% following extreme volatility, right? And the forecast for milder weather and lower heating demand have seen natural gas prices plummeting by over 12% on Monday after a strong rally on Friday to a 5-week high. The large drop comes only days after Freeport LNG boosted exports at its Texas plant after reopening last month following a shutdown that had lasted for 8 months. And I went ahead and covered that in my last video. That was some of the things that were causing, some of the boost, right, in natural gas and natural gas prices. One of the nice positive catalysts that we had. But while numbers like that contributed to a 1-month high last Monday and a 9% rally on Friday, by Monday, weather forecasts had taken over fundamentals. So that's what's happening right now, guys, okay? Weather forecasts are taking over the fundamentals, and we're seeing a sharp drop. There have been some patches of extreme weather that led to a reduction in gas output in December and February. However, cold weather has not been a sustained pattern. The forecast now is for less severe temperatures than those anticipated on Friday when prices rallied. While U.S. natural gas demand and demand for LNG exports is expected to rise this week, the rise is now smaller than that predicted last week. And we're going to move on. Okay, so that's some of the bearish articles, right? That's coming out today. If you take a look, this is just what the articles were saying Monday or last week, Friday and Thursday. Okay, they were very, very bullish. Natural gas closes above $3 for the first time since late January. A lot of the news was bullish last time I covered it. And they're starting to put out a little bit of bearish news, but I've got some more stuff we're going to dive into here. And this next article is from the Wall Street Journal, talking about how gas from Texas becomes cooking fuel in France. And so, that's something that's been a really big factor now, is that the U.S. is actually a really big exporter of LNG, right? If you take a look here, right, after its tanks rolled into Ukraine, Russia all but cut its flows of pipeline gas to Europe, by far its largest customer. The curtailment forced Europe to tap into supplies of American LNG like never before, its shores attracting tankers filled with the liquid gas by the hundreds. Between 2021 and 2022, exports of U.S. LNG to Europe more than doubled, right? And for now, Europe has been forced to increase imports of U.S. LNG, deepening the cross-Atlantic trading ties and elevating America's role as an energy superpower. And we take a look here, as coal declines, oil and gas emerge stronger than ever. And we go into that a little bit here, but you can see that American oil and gas drillers are on track to set new pumping records driven by high demand at home and abroad. But the biggest reason for coal's demise is the growth of cheaper and often cleaner alternatives. A wave of cheap gas initially knocked coal from its roost as the power sector's fuel of choice. Recent years have seen utilities increasingly swapping coal for renewables, but the same is not yet true for oil and gas. Natural gas demand is also on the rise, with higher consumption from power plants helping the country set a new record for gas use in 2022. What we're about to see is the embark on the first sustained decline in oil and gas in U.S. history. Yet, several analysts caution that declining American oil and gas demand is not a foregone conclusion, even with the Inflation Reduction Act. While the law pours billions into clean energy subsidies, it does not address logistical issues like building new transmission lines or streamlining the process to plug wind and solar into the grid. All right. Even if U.S. demand declines, supply may not. American oil and gas production has soared since Russia invaded Ukraine, with exports accounting for a bigger chunk of the U.S. industry's bottom line. Gas production, meanwhile, is set to surpass 100 billion cubic feet this year, another record. The U.S. is increasingly becoming a significant exporter of liquefied natural gas, that's LNG, and crude oil products, and that may continue as domestic demand contracts, right? So domestically, we may start to see that demand contract, right, and decrease a little bit. But when it comes to exporting, right, we've actually become a really, really big powerhouse in, the global export game, especially with the LNG. The Russia-Ukraine war remapped the world's energy supplies, putting the U.S. at the top for years to come. Since Russia's invasion of Ukraine, the U.S. and oil gas sector has boosted exports to the point where the U.S. is at the top of the world's energy exporting nations. It's amazing to think how all of these decades of concern about energy dependence to find the U.S. is the largest exporter of LNG and one of the largest exporters of oil. The U.S. story is part of a larger remapping of world energy. All right, and we take a look here as well. They kind of, go over that, but as Europe struggled with its threat to its supply of natural gas imports from Russia, U.S. exporters and others scrambled to divert cargoes of liquefied natural gas from Asia to Europe. Russian oil has been sanctioned, and the European Union no longer accepts Moscow's seaborne cargoes. That has resulted in a surge in U.S. crude and refined product shipments to Europe. The U.S. used to supply a military arsenal. Now it supplies an energy arsenal. It's amazing to think that all of those decades of concern about energy dependence to find the U.S. is the largest exporter of LNG and one of the largest exporters of oil. This week, we actually have a meeting, okay? They'll be attending the CERA week by S&P Global Energy Conference. That's going to be March 6th through March 10th. So starting today, and among the speakers at the conference are CEOs from Chevron, ExxonMobil, Baker Hughes, Freeport, among others. The price of natural gas spiked, but it came back down. Oil is lower than where it was before the invasion. The reality is we certainly have set in motion a rejiggering of global supply chains, particularly on the natural gas side. There's a global LNG boom that has become much more apparent and visible to the market. Right. And so what we're going to do now is dive into some of the charts. Okay. We just cranked out some news, went over some of the recent news that's come out in the past week. And what we have here is the monthly chart for natural gas futures. Now, remember, this video is not financial advice, right? I'm just going over data, going over some of the news. And all of these charts are nothing but data presented in the form of candlesticks, right? This is a live auction market, basically, and we're just seeing and interpreting buyers and sellers. So with that being said, we have two overhead supply zones that we needed to watch out for, all right? And I mentioned that in my last video that, really this area right here from about 220 to about 250 on the natural gas futures is an area where, there's an overhead supply zone. And what that means is that there's an imbalance of sell orders. That's what these zones are, right? And so that imbalance of sell orders had the potential to keep pushing us down, right? Originally, when we started off, okay, March, as soon as March came, we were a lot more bullish, right? And so we had the bullish reversal hammer candle right here. That's what this candle is. All right, this is a bullish reversal, and this is the monthly chart. So there's lots of time for this preceding candle to change as it changed from bullish to bearish. We're going to see if this thing can change from bearish back to bullish. And if we can close above the highs of this candle, then we do have a little bit more of a confirmation that we could be getting a bullish reversal. But ultimately, we need to take out this supply zone and try to, have price action drawn towards the next overhead supply zone. We do have a demand zone here that we've tested a few times in the past, right? We tested it over here. We tested it over here. And each time we've dipped down into this demand zone, we've seen buyers step in. A demand zone is where there's an imbalance of buy orders, and we can see that that's actually where this hammer candle formed. We dipped down into here, into this demand zone, but that imbalance of buy orders here really pushed the price up. Now, I also mentioned a rising wedge on the 4-hour chart for the futures, and that's what we're looking at right here, right? So, we have that demand zone. We have that overhead supply zone. And so in general, you're going to be cautious in these supply zones because, there's an imbalance of sell orders. We also had a rising wedge right here. And we did get a break and retest of the trend line, and now we're pushing lower. So if this pattern really wants to play out, most likely we're going to see the natural gas futures fill the gap at around 190.5. There's a gap on this chart right here. Okay, in between this candlestick and this candlestick. And, if this rising wedge continues to play out, then most likely we're going to see this gap fill at 190.5. Okay, so definitely just be aware of that. It doesn't have to fill, right? There's no guarantees. But being that we're coming from a supply zone and it's pushing price lower, And then we had the rising wedge chart pattern with a break and retest. We have two kind of things leaning towards a little bit more bearish news when it comes to some of the price action. So just be aware of that, right? Things could recover at any moment and start heading back up. But, I just want to present both sides to you guys, right? The bullish and the bearish. So that way you're not really caught by surprise and, you can hopefully navigate the market a little bit better. Now, this is the structure that I was actually looking for to start forming on Boyle. This is the Boyle chart. And what we have here is our inverse head and shoulders forming right now, right? So we've got our left shoulder here. We had a head and we started pushing up, right? And I said, hey, if Boyle comes back down, we're going to eventually start to put in a right shoulder right here, right? And so now we're actually doing that. So if we can maintain support in this area, consolidate a little, and then push back up higher, we do have a good chance of getting an inverse head and shoulders to play out. Now, this pattern is just in the, possibility of forming. It's not confirmed yet. So, don't buy into this just because, Boyle looks like it's forming an inverse head and shoulders. We haven't got confirmation yet, but it's doing a really good job. Now, I mentioned 795 in my last video as well for Boyle, and you can see that that's exactly where we found resistance at, okay? That's going to be a big level to pay attention to. All right, and we're going to continue to see it be a strong resistance level until we can really flip that from resistance to support. That's when Boyle could possibly get back into the double digits. But right now, 795 is that big overhead resistance level that we're battling. And we're going to see, what happens, right? Do we find support here and come back and retest that level? If we break out above there, then that's when we could see that inverse head and shoulders play out. But if we continue to head lower, maybe Boyle retest some of its previous lows right here. Okay, so, just be prepared either way. Boyle is making all-time lows and has made all-time lows here recently. And typically things that are making all-time lows are 52-week lows. They do have a habit of creating new lows. And so that's what it's done. It's continued to create new lows. Maybe this is a bottom here. There is a chance for that. But, we just have to be prepared, right? Maybe we get a retest there. Maybe it tries to put in a double bottom. You just have to keep an open mindset, right? Now, if we take a look at the spot price of natural gas, there's a couple, indicators that I really like to use, and those are going to be the MACD and the RSI. And so you can spot divergences and signals using these tools, and I'll go over those real quick, right? So over here, we have higher highs, right? Clearly in an uptrend. But if you look at your RSI, this is your relative strength index, right? It's going to measure the relative strength based on the price of whatever it is you're looking at. So if the price is going up, you should see the relative strength going up as well. In fact, we actually get a divergence, right? And so we put in a high and a lower high at the points where we put in a high and a higher high. Now combine that with the MACD, and we end up getting an exit signal here where the red line crosses below the blue line. And ultimately, you see that that plays out, right? The bearish divergence combined with the MACD sell signal, and we get a nice move to the downside. Now, this strategy also works to the upside as well with a bullish divergence, right? So we have a low and a lower low on the price right here, but then we have a low and a higher low on the relative strength index. So we're actually building relative strength, increasing in relative strength as price is heading lower, and you end up seeing a nice move to the upside. And this is played out multiple times, right? Along with the MACD crossover to the upside. Here we have higher highs, we have lower highs, bearish divergence, MACD sell signal, big move to the downside. Okay, lower lows, higher lows. We got a bullish divergence plus a MACD entry signal, move to the upside. And so here recently, I mentioned that we do have some bullish divergence on the spot price of natural gas, right? And this is some of the reason that I started to accumulate a position in natural gas is because we had the low right here, right? We have this low, and then we have a lower low over here. And look at what we did. We actually made a higher low and then a higher low again. So we do have some bullish divergence building, but I said we really need to pay close attention to this initial bearish divergence trend line because we are coming up and retesting it, right? So we had the highs and the higher highs right here on the price action, but then we had a high and a lower high on the relative strength index. And if we extend that trend line out, we did actually come up and reject that level, right? And so if we come here and take back a look at Boyle, 795 was a really big resistance level that we were going to be watching. We hit resistance there. On the spot price of natural gas, we also hit resistance at our bearish divergence trend line, and we're starting to see a pullback. So, if you want to be bullish on these things, you're going to need to see this bearish divergence trend line break and then get a retest and stay above this trend line, right? That's going to be a bullish signal. If you If buyers come in and break the trend line and then fail and come back below in the range, that's going to be a look above and fail. And that's going to be a bearish signal because bulls were presented the opportunity on the breakout to really push price higher and stay above that trend line. Rather, they failed and sellers took control. So pay close attention to that trend line. We are rejecting it now. If we do head lower, we want to bounce off of this bullish divergence trend line, okay? A break through this bullish divergence trend line could result in a sharp move down on the price of natural gas, UNG, and Boyle. Now, this is the UNG chart I have right here on the daily time frame. You know, I added some more positions down here right around the 752 price. I added back in at 753. And the reason being was that that was the target for the ABC structure that we had right here. So the markets like to move in about 3 or 5 wave structures. And so we had this large move down and a retracement. And if we were to get the C wave, right, that was going to be the 1.0 extension of our wave A and B. And we did actually get that C wave and actually dipped just a little bit below it before ultimately starting to recover. So for right now, things are just developing, right? We hit the target, we dipped a little bit below, and we're starting to bounce. Now we are getting a pullback, and we're going to see what happens, right? And so if UNG comes back down below 752, I may look at adding some more to my position. Now, just because I'm looking at something doesn't mean that you guys should as well, or that, you know, that's perfect for you. What we're doing rather is just kind of explaining my thought process behind some of the things. Now, we did have some bullish divergence here as well. If you take a look, right, we had a low right here, right, and then we're making lower lows over here. And you take a look at your relative strength index, right, we had a low, and we got an equal low right here, and we've actually started a little bit of an uptrend here as well. So, you know, we did have a slight bullish divergence here. That also was one of the reasons that I was kind of comfortable getting in here. Okay, as well as a MACD crossover to the upside. But the red line is not really creating any space, right? It's hovering very tight to this blue line. And so we could see this thing cross back down below the blue line, and that would be an exit signal and could be signifying a sharp move down on UNG. So definitely pay attention to a lot of these signals that we're going over in this video. Hopefully you enjoyed it. If you did, smash that like button, subscribe to the channel. I'm doing natural gas videos pretty much every single week. So if you enjoyed it and you want to see constant updates, you know, once or twice a week, this is definitely going to be the channel for you. And with that being said, I'm out.